Good morning. This is Bloomberg Daybreak Europe. I'm Joanna Versace in Dubai, and these are the stories that set your agenda. The German Chancellor tells us he is open to negotiating with the U.S. on tariffs, but insists the EU is strong enough to hit back. Meanwhile, Germany's political debate heats up ahead of this week's election. Germany's Chancellor tells us he is open to negotiating with the U.S. on tariffs, but insists the EU will hit back. Now, plus, Asian stocks gain as AI optimism drives a tech-powered rally. Chinese markets adding $1.3 trillion in value over the past month. All right, good morning again, everybody. Welcome to Daybreak Europe. We're going to get you a check on how markets are faring after a strong weekend of headlines. So much news coming through from the Munich Security Conference, with investors really focusing on what this means, the geopolitical landscape, and what that means for Europe's defense capabilities, and the knock-on effects of the Europeans having to go it alone for defense going forward. So we're going to talk more about that on the show. This is the picture for futures, though. Euro Stoxx futures leaning towards the red slightly. So we're down 7 basis points after a better end to the week last week, up 3% for the week. And remember, Euro Stoxx is up 14% year to date. So a strong start to the year for European markets. FTSE 100 futures also leaning slightly towards the green as well. We've got important data coming up this week in the UK, labour market data, UK CPI to watch out for. So those will be big drivers for those markets. And then S&P futures, NASDAQ futures also leaning towards the green. But bear in mind, today is a US bank holiday, so it will be thinner trading than usual later on in the session. As for cross-asset, this is what we're looking at. Take a look at the open for Bund futures. And this is a reflection of the fact that you will likely have to see a lot more bond issuance out of these European nations in order to fund some of these defense spending commitments. Investors are looking ahead to that. So that is the picture for 10-year bond futures, down about 0.4%. Euro also trading sideways, but we're basically around the 105 level again. So a bit of a rebound there coming through on back of the weakness in the USD, and also a relief trade with those reciprocal tariffs still hanging over Europe, but the decision to implement them has been postponed by a couple of months, hence why Euro is seeing a bit of strength. And Brent also in focus today, up about 0.2%, despite the fact that we are nearing a potential resolution to the Ukraine war. What that could mean for Russian oil supply is, again, a big driver for energy markets looking ahead. And then gold is close to, but not at, the all-time highs. We're just sitting below 2,900 here, up about 0.5% on the day, but gold continues to go from strength to strength. Now, senior U.S. and Russian officials are meeting in Saudi Arabia this week to discuss a potential Trump-Putin summit to end the war in Ukraine. President Trump says Ukrainian President Volodomyr Zelenskiy will be involved in peace talks with Russia.
We're trying to get a peace with Russia, Ukraine, and we're working very hard on it. It's a war that should have never started.
Do you expect Zelensky to be involved in these conversations? What will his role be?
I do. He will be involved, yes.
The chairman of the Munich Security Conference spoke to Bloomberg about the future of Ukraine's peace negotiations and his experience of dealing with President Putin.
Trump doesn't want to be seen as a loser in a deal. And knowing Putin from many meetings, having been diplomatic advisor to Chancellor Merkel, he knows how to flatter people, but he is like children. He smells weakness, and I think what he is smelling right now is something he likes. And but then when Trump finds out that he's been taken for a ride, he may react and say, "Not with me."
All right, for more, let's bring in Bloomberg's Greg Sullivan. So, Greg, looking ahead, we know that U.S. and Russian officials are going to be meeting in Saudi Arabia this week to discuss the possibility of a Trump-Putin summit. But what do we know about the possibility of the summit happening and what will be discussed?
Well, one thing that we do know is that the Trump team does appear to be moving very fast. He's been in office less than a month, and already there are senior advisors flying to meet Russian senior advisors, and it does seem like these preparations are made. We know that they would like to have a meeting, a leaders summit, potentially by the end of the month. So these officials are meeting in Saudi Arabia to try and hash that out. We also know that the Europeans have expressed worry about this. With the initial phone call where they agreed to begin meeting, a lot of Europeans were taken aback. And they do worry that Ukraine and Europe might not be at the table in the way they feel they need to hash out any sort of resolution or ceasefire.
Yeah. Well, stay with us because I just want to bring you some comments from the German Chancellor Olaf Scholz. He spoke to Bloomberg exclusively at the Munich Security Conference ahead of the European leaders meeting today. Listen to what he said.
I spoke to President Trump very early about how to support Ukraine. My plea is that there should be first the message to Putin that Europe and the United States will continue with their support to Ukraine, because he has to understand that he cannot hope that we stop our support.
But the US officials at this meeting have made clear that Europe's not going to be at the table in any of the important conversations. How can you're not going to change that?
I'm sure that there will be no solution possible over the heads of the Ukrainians, and obviously if someone wants Europe to be involved in the structures of peace in the future, it is necessary and to discuss with Europe and to implement the European leaders into this decision-making processes.
So, Greg, we know that some of the European leaders are convening in Paris today to discuss a potential response. Is there anything that they can come up with to ensure that they do get included in these discussions around the future of Ukraine?
Well, that's right. There certainly are alarm bells going off on many European capitals. After the weekend comments at the Munich Security Conference from Trump administration officials, and with this meeting progressing quite fast, European leaders are really scrambling to try and get their response to the U.S. to make sure that they are included in any kind of negotiations. There's a real fear that providing too many concessions to Russia could embolden Putin, but also that any kind of negotiated ceasefire could not represent Ukrainian or European security interests. And of course, in the longer run, European officials are already starting to fret. What does this mean for the transatlantic alliance? What does that ally partnership look like going forward if it looks like the U.S. is really stepping back? It's definitely setting off some alarm. And with this meeting coming today, it does look like European officials are scrambling to try to come up with that response.
Yeah, Bloomberg's Greg Sullivan. Let's see what the response out of Europe is going to be. A critical time for Europe. Well, at 7:45 a.m. London time, we will be speaking with the Defense Minister of Lithuania, a country that's closely watching the debate on Ukraine. So don't miss that interview. Now, the week is starting on a dour note for European bond futures. So here to explain is Bloomberg's Valerie Teitel. Val, I've got to say, one of the assets that I was looking at this morning was the reaction across Europe to all of the different headlines that came through from the weekend. But one of the ones that caught my eye was the reaction in bond futures. We are selling off today. What is going on?
It's all around the expectation of more coordinated fiscal response from Europe. How are they going to finance this defense spending? It's likely to come through with more debt issuance, and that's seeing European bonds such as German and French bonds trade lower this morning ahead of their open just over an hour from now. It's notable that these bonds have been trading quite weak in the last few days, with yields rising with that expectation of more debt issuance to come. But even though it's seen as a negative for European bond assets, Jumana, it's seen broadly as a positive for European stocks. It's been one of the main drivers of European stocks year to date. They have outperformed, outshined global peers when you compare it to U.S. and Asia. A near 12% gain for the Eurostoxx 50 futures, nearly 4 times the amount that S&P futures have returned. Now, the specific driver of this has been a lot of those defense stocks rising from the lows. One of those has been Rheinmetall. On Friday, hit a new all-time high. It's up some 32% year to date. We'll have an eye on how those defense stocks trade when they open later this morning. But Jumana, one sector in Europe that is yet to shine as brightly is European autos. We had another threat from President Donald Trump on Friday, threatening more auto tariffs as soon as April. And being those German automakers a key importer into the U.S. market, let's see how those trade as well at the open.
Yeah, so sector-specific, but at a macro level, people are accounting for the potential for more fiscal issuance out of Europe. Val, thank you so much. All right, let's move on and also check in on how Asian markets are faring with Avril Hong in Singapore. Multiple drivers over there. Also of note is that the President Xi had a talk with some of the key business leaders. So how has that gone down, Avril?
Yeah, multiple drivers. Even the Japanese auto stocks are down today, following on from what Val said. But as you say, it's really about that Chinese president's meeting with top business leaders that's gotten confirmation by state media. Among the top business leaders, we had the execs from Huawei, BYD, Xiaomi. But I think what markets were really latching on to was that he met Alibaba's Jack Ma. Remember, this was a company that was once China's e-commerce darling, then got squarely hit by the regulatory crackdown. Executives recently have been trying to turn around the company, restructure it. So the meeting was seen as potentially the government endorsement, perhaps of the tech sector as a whole as well. But it was interesting how, despite the confirmation we got in state media, Alibaba stocks actually turned negative. And on the Hang Seng, tech is not doing so well now. So really interesting to see maybe a bit of profit taking on the way as well. Let's flip the board, because I just also wanted to highlight Japan data today. It was a big beat for the fourth quarter. And I think it's getting the yen bulls excited. They also have Japan CPI numbers to look forward to on Friday. The point that MLI's Mark Cranfield is making on the blog, though, is that if you look at the full basis point or 25 basis point hike that's being priced in, you're all going to have to look all the way to September. The March-April pricing, very low for that. And there still seems to be time for this repricing to get underway, especially if you consider the BOJ's approach to the January rate hike. The media report flurry that we saw in the 2 weeks before the BOJ actually hiked and signaled its intent to the markets. Flip the board again, just for context, if you look at the price of Alibaba stock and how it's come about 60% since the January trough, that was the middle of January, it's still really far away from just before the Ant IPO got scuppered. Just keep that in mind, of course, as we look ahead to Alibaba earnings later in the week.
Yeah, that's important context. Avril, thank you so much for the overview there. Well, in terms of other drivers to watch out for global investors this week, we've got a series of significant data coming through in the UK. You want to watch out for labour market data. That comes through on Tuesday. But then we also have UK inflation data on Wednesday as well. You expected to see a little bit of an uptick, both for core and for the headline year on year. So that's always a big driver for UK gilts. So it's something to bear in mind. Wednesday, we get the FOMC minutes. This is coming off from a week where you had upside surprises in both CPI, PPI, though retail sales numbers did actually disappoint on Friday. So any clues about the direction of the US economy will be parsed very closely. And then Friday, we had global flash PMIs to get a sense for how some of these key economies are actually faring in the last month. And of course, as ever, you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go. And some of the top stories today are about Trump open to Europe buying US arms for Kyiv, Xi meeting these Chinese executives, and Musk's AI launching a new AI chatbot today. Well, coming up, we get the latest on how the markets are responding to Donald Trump's tariff threats. That's next.
I'd say over the next sometime, or maybe around April 2nd. I would have done them on April 1st. Believe it or not, I'm a little superstitious. No, literally, we had it planned for April 1st. I said, let's make it April 2nd. You know how much money that costs? That costs a lot of money just that one day.
President Donald Trump speaking on auto tariffs on Friday. But Wall Street has been playing a guessing game as to whether President Trump will follow through on his tariff threats. Equities have continued to rally as investors bet on a favorable outcome. But will the New Year surge continue? I'm joined now by Lale Akoner, a global market analyst at eToro. Good to have you with us. Maybe let me just start off by asking you whether you think this theme of U.S. exceptionalism that was so dominant towards the end of last year can continue in 2025.
Sure. Well, thank you very much. We, as other market analysts, are quite busy trying to decipher how the trade policy is going to shape up in the next few months. I do believe that, given the fact that the U.S. dollar has started depreciating across major assets, across major FX currencies, European stocks will have more room to advance from here. Obviously, some of the sectors will come under pressure, as Trump has alluded to, more tariffs on automakers. We think of, for instance, German automakers are particularly susceptible. So we say to investors, be very cautious about which sectors, which companies you are being exposed to. But overall, the US dollar weakening is a good sign.
Yeah, how much of a threat do you think these tariffs actually pose to the theme that you just highlighted? Is that the biggest risk for macro sentiment, do you think, this year?
I do believe so. I think it's a major driver of policy uncertainty at the moment. I think they are quite important, quite serious, in the sense that obviously the end game for the Trump administration is to be able to deliver tax cuts. And for that, they need to find revenue from somewhere. Obviously, they're just helping with decreasing spending from the federal government, but tariffs is a part of that. Yes, some parts of Trump's rhetoric is a negotiating tool, such as reciprocal tariffs, which we think is, in practice, is hard to implement. But what he really wants is countries to negotiate with him directly, and therefore, when you look at currency markets, which is the first place where these policies are being priced in, currency markets think that something that resembles a universal tariff will be in place.
Yeah, flight to quality assets have been doing quite well. We've just got the screen up of the USD. Towards the end of last year, it was a very, I should say, very popular trade. Some of the steam has come out of the USD this year. But let me just ask you whether you think this is an environment where safe haven plays will continue to do well. And here I'm not just talking about the USD, I'm talking about gold and other safe havens as well.
Sure. Obviously, as the US dollar continues to depreciate, we think this is going to be overall positive for gold. And to your point, in an environment where, again, policy uncertainty is quite elevated and possibly inflationary pressures on the rise, we think that gold has a very good volatility hedging role in overall portfolios. And obviously, again, going back to the equity market, we say stay invested in those quality stocks and companies which are able to generate a stable and long-term cash flows. And when you think about it, it's going to be, in this environment at least, it's going to be in mid-cap stocks especially.
Yeah, you're also recommending for people to be positioned in crypto and in Bitcoin. And I just wonder there what you see as the next catalyst for Bitcoin to move higher, because the market is already discounting an administration that has come in that is more pro-crypto and is likely to lead to a lighter touch regulation on that front. So where would the next catalyst come from?
Sure. I think the most important thing is continuation of easy policy. I think the market is really eyeing the Fed's forward guidance on that. We still think that Fed wants to deliver rate cuts. It's just the pace of rate cuts seem to have slowed down a bit. Again, deregulation will continue to be a major driver as the Trump administration is changing and going to change regulatory bodies that are looking after crypto. So I do believe that, Trump administration is really putting a floor on the price of major crypto assets. And we think, look, when you look at crypto, it has standalone volatility, obviously. But when you look at long-term correlation of, say, Bitcoin to major asset classes, going back to 2022 up until now, you see that the correlation is actually very low and, in fact, negative for some asset classes. And that gives us reason to put it in our portfolios, which would, decrease overall portfolio volatility when you include crypto.
Yeah, the risk obviously is if you get a massive pullback in risky assets, Bitcoin and the crypto community would also be exposed to that as well. But interesting perspective. eToro's Lale Akoner, thank you so much. Now, coming up, for investors seeking to mitigate inflation risks, carbon markets could prove to be an attractive asset, says Bloomberg's NEF team. We'll discuss the latest trends in the global carbon markets next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Protectionism and tariff wars are becoming bigger threats to global trade. But the world's carbon markets are becoming more interconnected, and this year will mark significant acceleration in the process. Here to tell us more is Emma Coker, head of Bloomberg NEF's carbon markets team. Good to have you with us. Emma, so for companies looking to reduce emissions with carbon credits, what should they be watching out for this year?
Yeah, so the carbon offset market has had a turbulent last few years with a number of market scandals emerging, but we believe 2025 could mark a tipping point for this market. Now, one of the main reasons for this is the country of Brazil. Now, Brazil not only is home to a wealth of their own nature-based offsets, which they could provide to the market, but the nation is also set to host the 30th Conference of the Parties in November. Now, we think carbon markets are going to feature heavily on this agenda, and the global carbon crediting mechanism under Article 6 could in fact go live there. Now, what this would do is it would signal to companies and countries that they could then trade under the UN-backed mechanism and hopefully restore some market confidence.
And recently, the UK Prime Minister signalled interest in linking the UK market with the EU's market. What does this mean, and actually, how likely is it will happen in reality?
Yeah, so this was an interesting development. The UK split out its market and started its own carbon market in 2021 following Brexit. But at the time, there was always a clause to say due consideration should be given to linking. Now, this appears to be happening in reality, where the UK Prime Minister signalled an interest in such a feat. And what we saw in response was prices actually picked up in the UK market after having trailed their EU counterparts. Now, this is not surprising. A merge would see the UK market have a big boost in liquidity. It's about a tenth of the size of the EU market currently. However, that pickup of prices could in fact end up with a bill for UK businesses. We could see the carbon bill annually increase by over £1 billion. However, these linkages take time and require alignment of policy settings, so it's unlikely to happen overnight.
Yeah, fascinating. And there we've got a chart up of some of the UK and EU carbon pricing as we head into a critical year. And of course, that COP meeting that's taking place in Brazil later this year as well. Emma Coker, head of Bloomberg NEF's carbon markets team. Well, we've had a very busy weekend in terms of headlines coming through from the Munich Security Conference. And coming up, Europe scrambles to respond to Trump's Ukraine war policy while its biggest economy heads to the polls. We're going to be getting the latest with Carnegie Europe's senior fellow Judy Dempsey next. We're going to be talking through the upcoming German federal elections, what that could mean for the future trajectory of the German economy, but then also bigger picture questions about Europe and their joint defense spending plans. So all that to come in just a few moments. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Jumana Versace in Dubai, and these are the stories that set your agenda. Donald Trump promises Ukraine's president will take part in peace talks with Russia as European leaders hold an emergency meeting in Paris today on the continent's security. Germany's chancellor tells us he is open to negotiating with the U.S. on tariffs, but insists the EU will hit back. Meanwhile, Germany's political debate heats up ahead of Sunday's election. Plus, Asian stocks gain as AI optimism drives a tech-powered rally. Chinese markets adding about $1.3 trillion in value over the past month. And a check on how markets are faring this morning. We are building on from a solid week for equities last week. Euro Stoxx futures leaning towards the red, down 7 basis points, but we also did rally about 3% over the course of last week, again on some optimism surrounding a potential Ukraine truce. So that is being manifested in some of these European equity markets. FTSE 100 also not doing a whole lot today, but inching towards the green as well, up about 4 basis points. We have key data coming up this week, labor market data and UK inflation data to watch out for on Wednesday. S&P and Nasdaq also starting the week off in the green, though it is a US bank holiday today, so we will be getting slightly thinner trading than usual. FOMC minutes is in focus though on Wednesday, so watch out for any clues about the US economy we get from that. Flipping over, what I do want to point out is a couple of market moves that we're seeing in some of these European assets. Take a look at 10-year bond futures, the Bund futures here. They are down about 0.4%. We were speaking about this earlier with Valerie Teitel, and namely because investors are accounting for the possibility of further fiscal issuance out of European countries to account for further defense spending. So that is one of the catalysts for these 10-year bonds coming under some selling pressure today. Euro trading sideways, but back at around 105 as we see a bit of weakness in the USD and a relief coming through from the tariff discussion, and that the reciprocal tariffs have not been applied yet, and the decision to impose them has been delayed by a couple of months. Brent also in focus, up 0.2%, a bit of strength coming through, despite the fact that talks between Russia and Ukraine will likely progress over the next coming weeks. And then gold, the ultimate safe haven, close to all-time record highs, up 0.3% today, though trading sideways. Friday, we saw a bit of a drop in the safe haven, but the trajectory has been very positive this year. Now, President Donald Trump says Ukraine's Volodomyr Zelenskiy will be involved in peace talks with Russia, a day after top U.S. advisors suggested the negotiations might go on without him. This comes as Europe scrambles to respond to the new administration's policy on the war.
I spoke to President Trump very early about how to support Ukraine. My plea is that there should be first the message to Putin that Europe and the United States will continue with their support to Ukraine, because he has to understand that he cannot hope that we stop our support.
Our job is to explain to the new American administration that, I mean, if the end game will be solved by Putin as his win, that's going to weaken not only Europe's security, not only Poland's security, but also the security of the United States of America, because everyone in the world will actually interpret that as a sign of weakness and as a sign of crumbling alliance between Europe and the United States of America.
A critical weekend of news coming through from Munich. For more, we're joined from Berlin by Senior Fellow at Carnegie Europe, Judy Dempsey. Good to have you with us. What does it tell you about the U.S. administration's perceptions of Europe and the fact that they have been sidelined from these Ukraine discussions?
Trump is actually amplifying what even previous American administrations have said about the Europeans, that they are very weak on defense, they are very weak on security. But the fact that Trump now is actually sidelining the Europeans at a time when Europeans generally have been united financially to support Ukraine, it's a real slap in the face for the Europeans, particularly for the EU President of the Commission, Ursula von der Leyen, who's been incredibly supportive of Ukraine and was instrumental in trying to encourage the member states to open EU accession talks to Ukraine. So it's a big slap in the face and damaging for the transatlantic relationship.
Yeah. Let me ask you, if there is an eventual truce and Ukraine sign on to whatever proposal is put forward, but have to make a lot of concessions, does that then put the European continent in a safer place than it was before?
Well, it depends on the kind of concessions or the kind of detail of the negotiations that the Trump administration is going to bring to the table. But what is important is, in what you just mentioned earlier, that maybe President Zelensky now will be involved in the negotiations. This is very, very important, and this is what the Europeans have always insisted upon. But if the negotiations mean ceding so much territory to Russia, it could embolden Russia more. And just remember what they're doing already in Belarus and in other countries. So it doesn't make Europe safer. So much depends on the content of the negotiations. And actually, if Ukraine is going to come out much worse, one wonders why they actually had 3 years of an appalling war and losses. And it doesn't make Europe very secure or stable in any way.
I've spoken to some people over the course of the weekend who actually see this as a potentially positive catalyst for Europe integration, for Europe coming up with a more coherent policy in anything from defense to digitization to infrastructure to energy plans. Do you think that the events of the past weekend will serve to be a wake-up call for Europe?
How many wake-up calls does Europe need? I mean, the first big wake-up call was during the Yugoslav war of the early 1990s. Then there's the Euro crisis, another wake-up call. Then there's the COVID, another wake-up call. And then there's the energy crisis, another wake-up call. So many wake-up calls. And so this kind of slogan becomes pretty meaningless. The call is for Europe to have a strong, coherent security, intelligence and defence policy. And at the moment, the 27 member states don't agree on this, and they don't have a common threat perception, despite what Russia has been doing in Ukraine. So a wake-up call should be actually put on the back burner.
Yeah, well, we've got important elections coming up this weekend in Germany. There is likely to be a shift in government. How do you think that is going to affect the trajectory of what we were discussing about further European cohesion and leadership once those German elections are out of the way?
Well, first of all, we don't know what exactly is going to happen in the German elections. If we assume that Friedrich Merz will be the Chancellor, the new Chancellor of Germany, it's going to be an awful lot of horse trading when it comes to setting up a coalition. But the key thing is that if the German economy is not put back on its feet as quickly as possible, Germany will not assume the much-needed leadership in the European Union. This is absolutely crucial. German leadership in the European Union has been lacking, even under Angela Merkel, actually, and under Olaf Scholz, the current Social Democrat Chancellor. And finally, actually, a strong German economy is not only linked to a stronger European Union, actually, it could finally give Europe and Germany the political, economic and defence leadership that is really needed, particularly what's happening now in Ukraine.
Yeah, do you think that Germany can make this economic comeback with the threat of tariffs hanging over the country from the United States?
Oh, that's a great question. Germany can't do this alone. I mean, it's got to be with the European Union, all the 27 member states. They've got to go in absolutely united on this. And Chancellor Scholz made a mention of this in his interview the last couple of hours, that not only Germany will respond to the kind of tariffs that the Trump administration may impose, but this is about the European Union really acting together, which actually brings us to the point why you need a much stronger integrated Europe to speak with a united voice when it comes to all the extraordinary tectonic changes that are taking place in Washington.
Judy, a real delight to talk to you. Thank you so much for coming on our show today. Judy Dempsey, Senior Fellow at Carnegie Europe. Well, we'll bring you all the news, analysis and market moves as we continue to build up to the German elections this week, including a special program when polls close on February the 23rd that will be live from Berlin. Germany's Chancellor says the European Union is strong enough to stand up to President Trump's tariff threats. But in an exclusive interview, Olaf Scholz told us the EU is open to talks to avoid an all-out trade war.
I have to admit that I'm in favor of free trade. I think this is a big advantage we have in the world, and that many of the wealth and the growth we have in the world is because of free trade. So it must be fair free trade, yes, but free trade is better than tariffs and protectionism. I don't think that this will work.
So it should lower tariffs?
When it comes to the European Union, I think everyone knows that we are a big economic area with a lot of strength, where policy about tariffs is something that is our common policy. So we are strong enough to react to everything that is harming European economy. But we should react always, but in a way that is always offering the chance for an agreement, because it's better for all parties involved, especially on both sides of the Atlantic.
But is the European Union considering cutting tariffs before any announcement on cars?
We invite the United States to discuss with the responsible authorities about what we can do for a better progress that serves all of us. There is a willingness. And so I'm sure it's better if we agree to something that helps all of us. And it is good to know that Europe is strong enough to act and to react.
You talk about it being a common project, but Donald Trump has made clear that he wants to do reciprocal tariffs. He doesn't want a WTO approach where all the rules are on the same countries. And even with the European Union, he might want to have a different tariff regime for France and Italy and Germany. What would you do then?
The European Union is a unified economy and has...
but there's nothing to stop the US doing that.
But it has common tariffs, and we act together, and we will stick together, which I think is also important. And so I'm quite confident that a good solution is feasible, and everyone should work to make it happen.
German Chancellor Olaf Scholz speaking exclusively with Bloomberg's head of economics and government, Stephanie Flanders. Irish leader Michel Martin says the risk of U.S. tariffs is a concern, while emphasizing the reciprocal nature of the relationship between Brussels, Dublin and Washington. Some in the U.S. have accused Ireland of running a surplus at America's expense. The Irish leader says the deficit is actually quite small when looking at services and goods together.
Free trade for Ireland has been a tide that has lifted all boats, and we believe free trade generally has led to the greatest increase in living standards in the world over the last 50 years. So we have concerns, we understand the issues, and I think if you look at services and goods together, the deficit with Europe is quite small actually, and I think we need to be careful that we don't upset the rhythm of what is a good relationship.
And coming up, ElevenLabs says its users have generated 1,000 years of audio content over the last 24 months. We'll talk to the AI company's co-founder next. This is Bloomberg. Well, following the AI summit in Paris, developers have been galvanized to expand their products into growing markets. One company, ElevenLabs, has raised $180 million in a recent funding round to advance its AI audio technology. Let's go out to regular anchor of Daybreak Europe, Tom McKenzie, who's with the company's co-founder. Tom, take it away.
Jemana, thank you very much. Yes, I'm very pleased to say I'm joined by Matti Staniszewski, who is the co-founder and CEO of ElevenLabs. Now, as you say, one of the most valuable startups in the European space, with a focus on audio, backed by the likes of Andreessen Horowitz, Sequoia and Salesforce. Matti, we're going to talk to you about the funding. Thanks for coming to the studio. Just give our viewers a sense of what you guys do at ElevenLabs, the proposition from your business and what market segments you're targeting, and then we'll get into the funding.
Tom, great to see you again. Thanks for having me. So ElevenLabs is an audio AI research and product deployment company with a mission of making information accessible across voices, across languages, across audio. So we do those two pillars. Mm-hmm. On one side, we build frontier models that allow you to build human quality, immersive, high emotion speech for narrating content. Second, turn audio to other languages while preserving their initial emotions, or allow you to build the lowest latency models that interact with audio. And then the second pillar, we build products around it. So whether it's creating audiobooks and working with companies that allow you to do that at scale, whether it's creating movies or dubbing movies to other languages, or creating those digital elements where you can build an agent with voice or build an agent from scratch with that audio experience. And that last frontier is where we see a lot of the future going.
So is that where most of this funding goes? You've raised 180 million US dollars. You're now valued at 3.3 billion US dollars. Where do you put that funding to use?
The first one is going to be double downing on our research. We've built the research hub. We have some of the great talented researchers in the place. We want to hire more, build infrastructure, invest more on GPUs and scale that. On the second side, as we work with some of the biggest companies, whether it's the Time or Perplexity, we are building the product that allows them and us to scale together with the right collaboration, with the right controls in place. And then the third one, and probably one of the most exciting one, is international expansion. As we've built the models, they are naturally available to cater to any language, and now we are expanding to Asia, to other countries in Europe, to really cater to those different nuanced languages as well.
So what do you project? What do you model in terms of the potential market size, market opportunity that you and ElevenLabs are targeting longer term?
We are looking to build a hopefully generational company, which of course would come with a few different business lines at billion-dollar revenues. And each of those markets is both already huge in terms of what's possible. Media and entertainment as an example, where you can create content, post-produce it, dub it to other languages. We are working with companies like Bertelsmann, which are just adopting AI to figure out how to tell stories in a more personalized way in different languages to their users. Then on the second side, we are working with companies that are just creating entirely new use cases. And that agentic place where you can build those digital experiences where voice is crucial is where we see both entirely new markets starting. So from one side, customer support, companies like Call Simulator, where we allow them to effectively create an experience that's a lot more seamless. Instead of a robotic voice on the other side, you hear an AI that's more immersive. And on the other side, entirely new use cases, like the Time magazine, where you can not only read the article, listen to the article, but you can also interact with the article. So you can ask it questions, you can learn more about the background. So we worked on the use case during the Person of the Year where that was new and possible. So the market is just getting started.
Okay, being able to interact with news articles is something that could certainly be interesting. Talk to us about the competitive challenge then, Matty. To what extent do parts of these revenue streams get cannibalized by the large language models like OpenAI, like Anthropic, like Gemini? Are they the main competitors to you, or is it other startups?
I think at this stage, especially as we think about the future of the company, we are competing against the biggest labs. They have the potential to build incredible models. Of course, they've so far specialized mostly on the LLM side. We specialize on the audio side, and that's where we see our advantage. So as we think about the future of the company, it's really double downing on building the models that are human-like, lowest latency, and allow you to build those use cases in audio in a way that a lot of those companies cannot yet. Of course, it's going to be putting our heads down and continuing to work as the challenge is still ahead.
In terms of the impact on the workforce and the labour force, the CEO of Klarna, Sebastian Siemiatkowski, has been quite clear. He wants to replace workers. He is replacing workers by using AI. Is that how you look at it? How are you looking at the labour market impacts of this product?
I think there will be definitely change in a lot of the professions that will do that work, and whether it's how the companies and whether it's call centers, whether it's customer support, they will evolve in terms of what's possible and how to operate with the audio. So far, we are seeing most of the use cases in the places where you don't have the capacity in place in the first side. As you think about recently we worked with a company in US called Elise AI, where they are automating how to reach out to people in healthcare sector that want to take appointments, and there's no enough receivers on the other side to take those appointments. And we worked with them where people can call in, speak with AI, arrange the meeting, reschedule the meeting, confirm it.
So you're filling a gap.
You're filling a gap, exactly, where that wasn't possible before.
Before I let you go, Matty, where do you IPO and when?
Great question. Hopefully in the next, that we'll be ready to IPO in the next couple of years, next 2-3 years. And where that's still an open question. We are happily a global company between the US and UK. So something that we'll be thinking about.
Matty Staniszewski, thank you very much indeed. The CEO and co-founder of ElevenLabs. Jemima, back to you.
Yeah, fascinating, Tom. Really interesting to hear about all of these different AI applications, this time in the world of audio. So a really good discussion there. Bloomberg's Tom McKenzie in London, who is, of course, the regular anchor of Daybreak Europe. But plenty more coming up. We're going to talk a little bit about some of the areas of the market that are benefiting from this drive, potentially towards more European defense spending. This is Bloomberg. Welcome back. Well, we're going to round up the show with a couple of charts that piqued my interest. Take a look at this one. This is just to encapsulate how well some of these European defense stocks have done over the course of the past year, to account for the fact that Europeans will have to start investing more heavily in their own defense spending. So this is a basket that UBS tracks, up 73% over the course of the last 12 months. Compare that to the Stock 600, which is only up 15%. So a huge outperformance there. But of course, it's not just defense stocks. We're also seeing a rally in Ukrainian bonds as well, to account for the possibility of some form of a truce agreed to in the coming weeks. So the rally started really picking up steam in earnest towards the end of the year. And now you can see that the bonds are trading at around 60 cents on the dollar versus around 45 cents last summer. So again, positivity being priced into Ukrainian bonds. And then another chart that I thought was quite interesting as we head into the federal elections this weekend. Take a look at this. This is the number of asylum rejections, which have outpaced acceptance rates just in the last couple of weeks or so. And you could point that down to the rise of the right in Germany and the fact that immigration has become such a huge political topic of discussion. But it is quite notable that the number of rejections has actually overtaken the number of acceptances for those seeking asylum in Germany. So I'll just park that thought as we head into the weekend. Now, at 7:45 a.m. London time, we'll be speaking with the Defense Minister of Lithuania, a country that's closely watching the debate on Ukraine, so don't miss that. And at 9:10 a.m., the CEO of Italian lender Banco BPM will be joining us to respond to rival UniCredit takeover bid. So all that coming up in the next few hours. But for now, the opening trade is coming up next. Thanks for watching the show. This is Bloomberg.